Hey guys, I'm back here on the macro trends Dow Jones 100-year historical chart, which we can adjust for inflation, which is extremely helpful because that takes the decline of the dollar printing out of the chart and you can see the mean reverted bottoms, just the value of the stock market. So this is the Dow stock market chart. And this is Brian Lewis with MMT Investing, and things just changed. So I want to take a look at, here's the Fed in 1913, here's World War I in 1914. I want to take a look at the history of the monetary system here relative to the Dow, because this chart is really great. And I hear a lot of people saying that right now we have an unbacked world currency system. It's unbacked fiat currency, and that is wrong. So what is up is we have absolutely had backing on every stage of this currency system, and we're going to talk about each stage and what's been backing it, what makes a bubble go up, and what makes it pop, and what the backside of the bubble is, how it works, so we know what we're looking at in our current everything bubble over here. Okay, so yeah, so Fed 1913, World War I, and then I want 1944 around here. This is Bretton Woods. And then 1971, right around here, is when Nixon closed the gold window. And those are really good points to point out. So back here, the British Empire, the sun never sets on the British Empire. So the British Empire smashed that like button right now to help me out with the YouTube algorithm. The British Empire was the world reserve currency prior to World War I, and they got a lot of debt. And through here, the world reserve currency went to kind of competing currencies, and then the US dollar became the world reserve currency at the end of World War II at Bretton Woods. And so here's what that looked like. We had the Fed with a fractionally gold-backed dollar, started printing it up, and they printed enough dollars that the gold backing on the domestic US dollar was no longer sufficient, and you get a bubble pop. And this backside of that bubble is the Great Depression. And that is what a depression is. A depression is the backside of a real bubble. So not like the dot-com bubble and the housing bubble here. Those are intermediate monetary contractions. All these recessions around here are just intermediate monetary contractions. But a bubble is, or a depression is the backside of a real bubble. And so you can see here that we come down to a mean reverted bottom. And then at the end of the Great Depression is when Roosevelt confiscated the gold in 33. And then he also confiscated the silver in 34. Not a lot of people know that the silver was also confiscated. And it was Executive Order 6102 in 33 and 6814 in 34 as when they collected the gold and the silver. And they were stockpiling a ton of gold this whole time. So around World War I, they were loaning money and collecting gold, and all the countries were paying in gold for all the war supplies. And so by the end of World War II, America had a mountain of gold. And so what happened is the Bretton Woods Agreement in 44 is when all the countries agreed to back their currencies in dollars, and then the dollars were backed in gold. So it was a gold-backed world reserve currency system, and the USA was officially the world reserve currency system right there in 44. And that's when you get this takeoff of this bubble, is America printed too many dollars for that gold-backed system. And you get this blow-off pop here, and then you get this wind down here, which I would call a depression. But this, if you look at the non-inflation adjusted stock chart, doesn't look like a whole lot. And people just call this period kind of like the big stagflation period. But if you inflation adjust the chart, you can see that this is a big wind down off of the bubble. And this whole period here where we wound off the bubble to the Volcker bottom is a depression. By my definition, the backside of a bubble is a depression. And then you get the mean reverted bottom down here. This is the Volcker bottom that I have in all my stock charts as the main bull line at the bottom of our stock market crash here. And that bull line goes this way, right to this bottom that we hit. And that is, this period is really important because this is where the gold was no longer sufficient to back the number of dollars that the Fed printed. And we switched here from a gold-backed Fed dollar to a non-gold-backed international bank-issued dollar. And that is the Eurodollar system. That's the world banking system. That is the world reserve currency today. The Fed dollar is not the world reserve currency. It is the Eurodollar, which is a international bank-issued credit. And that's what all the international loans, the companies and the banks across the world have, is dollars loaned from those international banks. And so this system, people think is an unbacked fiat system, and that's not true. So when it started to switch to the Eurodollar, this is backed in oil. So you hear people say the petrodollar, and then that is what is backing the Eurodollar here is oil. So it's commodity-backed currency. And here in 71, when Nixon closed the gold window, people think that that is all of a sudden thing when they just decided to not give people gold or something. But the gold backing the dollar happened back here at the peak of this bubble. So the gold stopped backing the dollar here, and this whole time from the peak down to the gold window, everyone was doing a run on the gold and asking for the gold back, and America didn't have the gold to pay everyone. And they just said, no, we're switching to a different system. Like that system ended, and they didn't tell everyone like what they're switching to. They just said they're unbacking it. But what it switched to was the Eurodollar system, which was backed by oil. And that's the OPEC agreements happened around here. And even though we switched to another system with a different backing, you still get this whole wind all the way down to this mean reverted bottom. And then we get this run up, which is our everything bubble. And the everything bubble is not just oil backed. The world reserve currency system right now, the Eurodollar system, is backed in corporate securities and with housing securities and with oil. And then you can see here in the dot-com bubble is we printed enough money to test out those corporate securities, and we got that big NASDAQ blow off in the dot-com. And then here in the housing bubble, we got enough money printed to test out those mortgage-backed securities, and then the mortgage-backed securities and the housing bubble blew off, and we get the financial crisis down here where all the collateral is bad and nobody knows what's going on, and everyone wants treasuries and they don't want mortgage-backed securities and they don't want corporate bonds, and oil is still backing, and we get this blow up to the everything bubble here, and we get this big blow off top. And now what's happening, so like here in the dot-com and the financial crisis, we had all this wild activity in the banking system where people were making really risky loans and they're providing a lot of liquidity. And that's not what's happening now. So now we have hit this point where there's no liquidity. Like all of the collateral is bad. You see all the companies getting downgraded to junk now. You see oil crashing. You see all the housing loans getting cut off and called in. And the collateral that is backing the Eurodollar system right now is all bad. Basically, is what's happening. And this is the same thing that happened here when the collateral backing the world Fed dollar went bad, and that's the same thing that happened here when the collateral backing the domestic Fed dollar went bad. Our collateral just went bad. Basically, is what's happening. And if you watch Jeff Snyder, he talks a lot about collateral, and he talks about U.S. Treasuries being the only pristine collateral, and that is just an IOU from the government, because the actual commodity collateral now that the banks usually hold and they trade in the repo market and they use to make loans, nobody wants any of it now. It's all too risky. It's not valuable. It's all junk now. So it's like everything that's backing the dollar system is now junk. The housing securities are junk. The corporate securities are junk. The oil has crashed. And that is what the everything bubble is, as it's this, it's just the pop. It's the pop at the top of this collateral backing on this system. The world banking system has now printed enough dollars to run past what all of that collateral can support, and then you would expect to see a movement like this or this. I mean, so in the Great Depression, we didn't switch to another system. We just had an asymmetrical kind of fast wind down back to a mean reverted bottom. But here we did have a switch to another system, but you still get the wind down all the way to a mean reverted bottom. So looking at this chart, either one of these could happen. If we switch to another system that's viable, then you have a really long bear market, but you get all the way down to a mean reverted bottom area. And if you don't switch to another system and the dollar collapses faster, then you get something that looks more like the Great Depression that would go down quicker. And that's kind of the outlook of what a sovereign debt bubble is and what the collateral backing is on a currency and what happens when you print too many currency units where the collateral is no longer good and you get a run on the banks against that collateral. And that's kind of the point that we're at right here. And it's not clear what exactly we're switching to. And it doesn't really look like there's another system available. So I think this model is probably the closer one because there's no alternative to the dollar system right now. I mean, there's some ideas about Bitcoin or about maybe some gold currencies around Asia, or I mean, there's just no system really that we could switch to right now. And that's kind of what the everything bubble is, and that's what the world dollar is. So most people don't even know what the euro dollar is or how it works or or anything about it. So that's the system, and that's kind of the model that I'm looking at now, and that is the everything bubble. So you'll see these lines in my charts. I have like a bull line off of the Volcker bottom, and I have a bull line off of this financial crisis bottom. It kind of runs up through here, and then there's a bull line off this Volmageddon bottom. Oh yeah, I could do a couple of videos on Volmageddon also. It's a big volatility area, kind of on the top of the bubble. Yeah, okay, so I think that's sufficient for talking about bubbles and what backs the currencies and how that works. And this is not investment advice. Happy trading and cheers.